What is up guys? Welcome back to my channel. This is the Alpha Trade. Today I want to show you guys something very powerful. This strategy, I talked about it in my previous video, and today I actually used it to take some trades, and I want to show you guys how successful it is. As you can see here, we have a trade that's running right away. I have a trade running right here. You can see this, and the trade is doing well. Okay, so it's on profit, and I want you guys to follow me as I show you more examples on this. Okay, because this strategy really works, like it works very well, and I want you guys to make money with this strategy. That's why I am emphasizing on it. I want to show you again how it works, that this strategy is really a bombshell. Okay, so if you're ready, I am ready. Okay, I'm ready. So if you're ready, smash the like button, subscribe to this channel if you're new, and turn on the post notification bell so whenever I drop a new post you get notified. Also check the description box below this video. You are going to see a link to my Telegram channel. Okay, so click the link and join my Telegram channel so you'll be able to trade with us. This is the Telegram channel here. Okay, so join our Telegram channel and be able to trade with us and make money for yourself, right? Take that chat setups, our free signals, and all of that. You can see is one of the trades we took. Look at this, one of the setups. This is so cool, guys. Look at it here. You can see from here, the way from here to this point. This is massive. Look at this. Look at the oh shit. Look at this. It's not showing properly here because of the write-up, but we got about 250 something. Okay, that's it. Look at this. Okay, you can see all this. So this is what you get, what to benefit when you join our Telegram channel. Look at it. Free signals, drop free signals, free chat setups. So this is it. Massive. Okay, so make sure you join us today. Make sure you join this channel today. All right, so let's get back to the video. All right, now this is it. In this strategy, you just need two things. You just need the moving averages, right? You are not going to bother yourself with so much market analysis. As it is here, you already know the market is trending downwards, right? You don't need to bother yourself much about that. Now look at this. You can see the moving averages here. Then price comes close to any of them. Okay, as soon as price comes close to any of them, it bounces off. Look at it here. You can see that it bounces off and gives us this stuff, gives us this candle here. This is a kind of engulfing pattern. Okay, this is the candlestick give us an engulfing pattern. You see, as soon as you see this at the close of that candle, that's where you want to open your trade. Then just above it, above that candle, you close. You place your stop loss. Okay, guys, with this strategy you are meant to risk only one candle. Okay, you are meant to risk only one candle, nothing more than one candle. You're not supposed to risk more than one candle. When I made the video previously, the first place, I titled it "Never Risk More Than One Candle Again." Okay, never risk more than one candle again. That was the title of the video I made previously. So this strategy requires you to risk only one candle. It's not like the one you risk a lot of pips. This is just one candle, and you see that the risk reward ratio becomes so large, so much. That's how it is. Look at where I entered the trade and look at the TP. You can see the TP here. This is a TP here. So if it eventually hits my TP, guys, it is going to be massive. It is going to be massive. Then I will be, if I enter this kind of trade at any point and it doesn't go my way, it is my stop loss, it is going to be very small, like very small loss. That's how it works. So with this strategy, you are going to only risk just a single candle. So what you do is, as soon as price returns to any of these moving averages and you see the rejection as we have seen here, then you want to place your trade and then place your stop loss just above the candle. Okay, if you are buying, you place your trade at the close of candle and then place your stop loss below it. That's about now that is a sell, you place your trade at the close of this candle here and then place your stop loss above it. Okay, so that is how it works. The same thing keeps happening. This is how you are able to catch a fresh trend, a new trend, and you're also able to use it to join a trending market. Okay, you join the trend. If you are someone that you always meet the market trending and you are wondering, where do I enter, how do I join this trending market? This is a solution to that. You don't need to search any further. Just wait, have this moving averages set and then wait for price to come back to them. Look at what happened here. See, price came back here again and then it was rejected. You would have entered this trade here at this point. Okay, maybe you'd have entered this trade at this point and place your stop loss here above the candle, and then that is it. The same thing here. You go to it and you can see the rejection. You have entered here, place your stop loss here, and then that is it. You make massive profits. That's how we make the market on a daily basis. It keeps happening, guys. Look at it. This is not limited to only boom and crash. That's another thing you should take note of. It's not limited to only boom and crash. It works for all the other synthetic indices. I have not tried it on currency pairs, but I've tried it on synthetic indices and it works wonders. Look at it here. Boom, take your SL and then boom, profits. The same thing here. Entry, SL, boom. It keeps happening. The same thing here. Entry, SL, then boom. Now if you look by your left, the most previous high will be your TP, right? Because you are buying, the most previous high will be your TP. Then once it gets there, you close one of the trade and you can use your trailing stop to allow the rest to continue to run. That's how I do it. If you look at this place, you even see it here. Look at it here. If you look at this place very well, you see that I'm sure you can see this. You can see this line here. So if you take a closer look here, you're going to see what happened here. I actually entered two positions. You can see this line here, this dotted line here, this dotted line up to this point where you see this kind of small arrow here. Okay, this is a small arrow, which means a trade, a sell trade. When you see when it starts with red here, it means it's a sell trade. Then closes with blue, that means it ended in profits. Okay, so I opened two positions here, and then this one run to this point. This was where I placed my TP. I can see it has closed up and I'm still holding this one. Okay, so at some point I'm going to bring down this stop loss to this point. Okay, because I've gone into profit already. So that's how I do it most times. When I enter the trade here, I entered like two positions, place my stop losses here, and then the first one will be anywhere along the road. Once the TP is hit, the first TP is hit, I will allow the other one to keep running. Then I will be trailing the stop. As it moves like this, I bring down the stop loss closer. As it moves, I bring the stop loss closer, just like that till we get to the where the market will reverse, where price will reverse. That's what I normally do. So you can also do that. Okay, you can also do that. If you can't, like now, if you check very well, you see that the the low, you don't have any obvious low here. Maybe you can use this one here. I can use this one sometimes, but it might not be too obvious, so I might decide to just use the trailing stop if I don't find any reasonable place to place my TP. But I used this low previously. This was the low I used. That was where I placed my TP, as you can see here. Okay, then after that, keep trailing it. But in case you don't find any low like that very close, you can decide to be trailing it. And even if when you use the low, you can decide to close only one of your position, one or two positions, depending on how many positions you opened. Close from there and then allow the rest to run. Okay, allow the rest to run. And if it's in a situation like this one here, or this one here, in a situation like this one here where you enter the trade here and the next high is just very close like this, it's just very close like this here, you can open multiple positions and then once the tip is hit in this one, you close, that one will close, then the rest will continue to run in case it reverses against you. So you the one you closed earlier will make up for any loss you might incur, and it will just be a kind of break even. That's how we do it to make more profit, to maximize our profits in this business. So let me show you. This does not work only this is not only for boom and crash, it works for many more. Now it works for many of them, like many more of them. Okay, you can see it here. So it works for almost a lot of these synthetic indices. It works on almost all of them. Look at this, it works so much on them. You can see profit here again. Let me see, let me show you more. This is jump 75. Okay, nothing here. This is jump 50. Look at this one also. Look at this one, guys. This is massive. Enter the trade here. Let me pull out this things. Okay, enter the trade here. Look at it. Enter the trade here. As soon as I saw this rejection here, okay, price returned to the 200 moving average, rejected, and then this was the entry. This is the SL here. You can see how it tanked to the downside, went down. Assuming I wanted to enter again, I could have entered another one here as soon as price came back, and then place my SL here. Could have entered, and you can see this would have more profit for me, but I chose to hold this one. Just to hold, and I'm still holding. You can see this is how to make money from the market, guys. This is how to make money. You don't need to kill yourself doing several analysis. You don't need to do that. Look at this one here also. Look at this one. As soon as I got this rejection here, so I quickly entered the trade, place my stop loss a little bit below it. Is it? And you can see the result is mind blowing. You can see it. That's it, guys. That's it. And then this is another one here, jump 10 again. This is it. This works both on boom and crash, and then volatility indices, and then jump indices, even step index. It works on all of them. It works really massively. This is mind blowing, guys. Look at this. Price has been moving. At this point, it rejected. I missed this one. Then price came back again. I said I will not miss this one. I place my entry here and see my stop loss quickly, and you can see how it continued to move in my direction. This is money, guys. This is success money. So I am showing you these things so that you guys can start making profit with it. Also, stop losing, stop wasting your time in the market. Use this strategy and make money for yourself. Now, what moving averages am I using? What are the settings of these moving averages? Let me show you the settings quickly. Mind you, the settings are all the same here. Okay, the settings I used here, they are all the same. The first one on orange color, you can see, is the 20 moving average. Method is exponential. Apply to close, right? And I choose the color orange. Okay, this for 20 moving average. Then the next one on blue here is the 50 moving average. Method is exponential. Apply to close. Okay, is blue in color. They call it Dodger blue, right? Okay, is it? Boom. Then the one on red, this red one here, is the 200 moving average. Method is exponential. Apply to close. Style is red. So these are the three moving averages I use. If you have been watching most of my videos, you see that I have used this in many of my videos to show you. So that is just it, because this, we know that the market, from experience, the market only does two things. It does expansion and contraction, and these moving averages show us, but some people don't know this. What most people look at is the crossover. They say, it crossed over. When it crosses over, you buy. When it crosses below, you sell. And you discover that you keep doing that and you keep losing. Look at this here. Look at here. It crossed. Oh my goodness me. This is it here. It crossed below, and imagine that you sold here, you would have lost big time. This one crossed below here also. Imagine you sold there, you would have lost big time. So it is not about crossing below or crossing above. And look at this here. it also crossed above here, and imagine you bought here, you'd have also lost big time. So that's why I tell people, forget about cross above and cross. Look at this, cross below, you sell here and you see price goes against immediately, cross above, and before you know it, boom, you are losing. Cross below, it goes with you with one spike and then turns against you with several candles. And that's how people keep blowing accounts more than you can count. Okay, so but today I want you to stop looking at the moving averages as what you use for cross above and cross below. No, they can serve as dynamic support and resistance. This is what I use them, dynamic support and resistance. Okay, so this is it. As you can see it here, look at what happened here. The market does two things: expansion and contraction. That is, it expands, it contracts, and the moving average shows you exactly that. Look at, you can see how the moving average has separated. That means they have expanded. The space between them has expanded now. Look at it. That's the same thing here. It was on expansion. The space, then here it came close. As soon as it comes together, you know that something big wants to happen. As soon as it crossed here, as soon as it retraced, rejected, and you can see what happened. That's when this movement started. That's exactly what happens. It expands, contrasts. As it contrasts, something wants to happen. That's where you pay attention. Look at it. It expands here, contrasts, and you can see the contraction here, retest, and then this rejection. And that's what I'm making money with. That's exactly what happens. I'm going to talk more on that in my next video on expansion and contraction. How to find them out and how to take advantage of that. Okay, so if you want to know, if you want to get the video when I do that, just subscribe to the channel and turn on the post notification bell. Make sure you turn on the post notification bell, and also like this video, share to your friend, join our Telegram channel so that you get more updates from us, you reach me, and also so that you'll be able to benefit from our services. Okay, our robot is available, our signals, okay, our signals are available, and our account management plans available. Okay, account management plans available. Whenever, if you are managing your account and it happens that for any reason, which rarely happens, but for any reason we lose your money, man, we refund you. Yeah, that's what we do. Look at it here. It's stated here in the agreement. Profit split is 50-50, and then in case of any loss, we refund you. Look at it here. Losses get refund if I lose. This is it. In case of any loss, we refund you your money immediately, which rarely happens. It rarely happens. Okay, it rarely happens. But in case it does, because I think happening in market, in case it does, we refund you. But stay with us, reach us, okay, and trade with us and make money. Thank you guys for watching. Thank you for watching. Thank you for watching. And bye.